Welcome traders, David DeBay here for Polaris Trading Group, and this is week number 4 of our continuing series of our review and preview in affiliation with Infinity Futures. We're going to take a look at what happened this past week in our trading room, some of the opportunities we had, and we're going to take a look at the upcoming week for April 24th through the 28th, and it is going to prove to be a busy one. A lot of things on tap this week for you guys. But before we get to that, let's take a look at our disclaimers. It's required that I mention NFA Compliance Rule 2-29. Many of you already know this. Hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of a loss. Past performance not indicative of future results. Also, that Polaris Trading Group offers services and products for educational purposes only on a subscription fee basis. Okay, so let's go in and take a look at the industry charts to see where the action was this past week. Okay, so this first display here is called the relative rotation graph, and this is where I usually begin my analysis for this past week and to get a sense of where the markets have recently been going. Now, this is a very interesting chart, and it is through stockcharts.com, so feel free to go in and take a look at what stockcharts.com is all about. I've been a subscriber there for a better part of 15 years. But what this basically graph does, it shows 4 blocks here: an improving block, a leading block, weakening block, and a lagging block. And you can see where the current situation is, where each of this is the major markets here, where they are currently located and where they have been on a week over basis. So let me actually animate this. I think you'll find it very interesting. So let me click on the animation here, and you'll see how the graph kind of rotates around. These lines kind of move around, and then it stops where the current week has completed. So what does this tell us? Well, you can look at the lines or you can look at the table down below, but the NASDAQ still is holding on a relative strength basis, a leading position in the technology group. Utilities has has just moved into the leading group. It was in the improving group, I believe, last week. As you can see, the little dot there, that was the improving. Now it's in the leading group. Now that is a defensive sector, so that does not bode well for the outlook of the market. All right, to have utilities lead. Transportations here had a down week, moved into the lagging area, as well as small caps, Russell, some of the mid caps, etc. All right, so what this basically does is it paints a picture of continuously weakening conditions. And although we did have a little bit of a rally during the week, the sectors have not really shown much improvement. Okay, so let's go to the next graph here, and that one is the simply what we call a performance chart for the S&P sectors. And clearly, it was actually a relatively benign week, except for the energy group. As you can see, the energy group was down on a relative basis 4%, whereas the majority of the other groups just marginally held on to the upside, marginally held on to the downside. So all in all, it was kind of a neutral week. There was a lot of trading activity, but the algorithms this week were on full movement, and we'll take a look at that when we get to some of our lower time frame charts. Okay, so all in all, again, this was this past week, driven by the energy to the downside, and again, everything in the overall group sectors was relatively neutral to weak. Okay, financials, by the way, was also started to weaken up, and again, it's not good when financials are not leading. Okay, so let's go on to our next chart. Now, what we want to do here is take a look at our performance here of what happened throughout the week. All right, and this is our what we call our performance report tick count. And although it was a relatively benign week in many respects, our core signature premium and discounts actually performed fairly well. There was actually really 2 days that actually stood out in towards the middle of the week. that really helped the whole situation. But for the week of 4/17 through the 21st, we had a total of 32 ticks on the ES and 40 on the premium, discount premium, total of 72. Now keep one thing in mind, these are minimum tick readings, right? We only measure only to the what we call the risk-free level. So come on out to our website, take a closer look at the performance report, and you'll see what we're talking about. Now this was only the minimum amount of ticks, so this is what we call a baseline of what could have been extracted from the market, basically a one-to-one reward risk basis. Okay. On crude oil here we had 20 to 40. Now again, these are minimum, as I mentioned. All right, and you'll see we had plenty of further opportunity to exceed 60 ticks. Okay, again, 60 being the minimum now. All right, so let's take a look at some of the details here again this past week. On ES, now on this particular tab, we're very transparent and we highlight the details on a day over basis for the signals, whether it's a discount or a premium. Now a discount is a long and a premium is a short. So it was pretty much balanced between discounts and premiums overall throughout the week. And again, through Monday the 17th down through Friday the 21st, let's see, we took in a total of, I believe, what did I say, 60 ticks or so? 72 ticks, I'm sorry, 72 ticks, all right, in total. So you can drill down and take a look. Midweek there, we had a nice little flurry, and as you can see, this particular day right here, on the 20th, which was Thursday, we had a nice move to the upside that actually went beyond the 8 ticks. So this column here, what you're seeing is this is the minimum tick reading, which is called risk-free or 1R. Now this is what we count, this is what we measure. Okay, the column K, L, and M here, target 1, target 2, target 3, are recorded, but they're not actually added into the totals. So as you can see, many of these setups here during the week actually performed better than what we had originally recorded. And then over in the crude oil sector, Monday and Tuesday were actually very quiet. As a matter of fact, there weren't any trade setups at all. Wednesday was the EIA petroleum report number, and we exploded with some downside action. And as you can see here again, at about 10:51, there was a nice short premium that went for a total of 40 ticks. Now that's per contract now. So again, just add to that if you're using multiple contracts. And then on Friday, we had another sell-off kind of right around late morning here, about 11 o'clock, mid to late morning, that pushed price down again in excess of 40 ticks on that one particular setup. So this is what we did in the history of this past week for our setups in the room. Let's take a closer look at some of the charts and see what some of the overall, again, action has been, and see what we can take a look at for the upcoming week. Okay, so for the upcoming week, we're first thing I always take a look at, guys, is the economic calendar. See what's on tap, see what's important. Tuesday, new home sales and consumer confidence, both at 10. That should be potentially a driver short term. We have the EIA on Wednesday in the petroleum report. Again, they've been experiencing builds over there. Thursday, durable goods, jobless claims, and lastly, Friday, GDP. And again, GDP is important. It gives you the kind of a snapshot health of the economy as a whole. Also, what's not on this calendar here, since it's just strictly for economics, there's some key events this week on tap. Thursday, President Trump submits his budget covering only discretionary spending. So that's going to be set forth in front of Congress. What else we have? Of course, we have the French elections over the weekend here, which may or may not be a driver for the markets tomorrow. But that is ongoing right now. I do not have any early results on that at this time. Friday, the April 28th, again, the looming government-wide funding bill expires. So again, unless Congress passes and Trump signs the catch-all spending bill for another extension, the government would partially shut down. So there are some Democratic votes apparently that are needed to pass the bill through Senate. So that's going to be a showdown at the end of the excuse me, at the end of the week, which is also fun to watch, and the markets respond accordingly. So again, it should be potentially a bumpy week if all does not go as smoothly as the markets would like. Okay, so let's just quickly get to the chart. This is the bigger profile that we've been using over the past few weeks since we started our weekly review previews. And we left last week coming off of this potential ABC Wave 4 pattern all the way down to Wave 5 or Wave potential Wave C, who knows. We were talking about potentially finding support at this lower channel line. We saw resistance up here at the 2372 Yell, and we did get that bounce during this past week. Now we just came just shy of again the downtrend line here, the channel line. So we're looking for a potential for a test of that. All right, early in the week, again around the 60, 65 area. All right, there's again you can see the very high volume node there. So this is going to be key to either a continuation or not. The market closed off those highs on Friday for options expiration. So we have not taken out the low of Thursday, kind of backed off about 2/3 of that range. All right, so down here in this high volume node around the 40 area, keep a watchful eye out on that. Again, that was approximately Friday's low, Thursday's high volume, and multi-day high volume. So if price tends to violate and convert that in that 38-40 area, okay, we could see further weakness heading into the mid part of the week, and a retracement here would at least test the 30-32 area here, and if a violation, we should then retest this low and potentially go lower. That's one scenario to the downside. The flip side scenario would be to clear this downtrend channel line resistance over here at again around the 65s, give or take a few margin of error, and then try to attempt to rally back up to the L, the upper extended downtrend channel line, and retest the highs. So it'll be an interesting week. Again, you can see here we're in an area of very high congestion and volume over the past several months, and it just does not seem as though the market wants to really gain any traction either way. The overall lean bigger right now is still down on this particular picture off the high, but we still have some higher lows here marginally. So again, the bulls need to perform, all right, and get notch a new high. They need to protect any further weakness that comes in at or above the 2330s as I see it. Okay, and the next, this is our profile that we use on a daily basis for our daily trade strategy. What I've done here is I've combined the past 5 days here on the left, and I've extended the value area out to the right. So as we come in, and this is Friday's action, you have on the right. So Monday is on our cycle is cycle day 1. So normally we expect some sort of a decline to occur, some magnitude decline, and if that occurs here, the initial downside targets will measure down to 2338s down to 2336s. Those are just some initial areas should the market open weak. Now, that being said, if the market does rotate down the auction to that level, that is the lower value area for last week, and so the expectation is there would be some sort of a buy response that steps in at around this level here. All right, so that would be downside. Now, what we do, guys, on a daily basis is we update our cycle charts every day in our daily trade strategy for our subscribers and our members, and we go over this pre-morning each day. So if price, as you can see here, 23.46. Now, for many of you, if you recall from last week, the 23.46 level was the prior week's lower value area. So if you can kind of visualize and overlap that the 23.46 was last week's lower value area. This week's, it's this past week's upper value area. So what does that mean? Where price is currently around the 48s, all right, 47s, 48s, we're pretty much in the middle of the past 2 weeks of value. Again, kind of an, in one sense, kind of a no man's land area. Lots of movement back and forth, up and down on an intraday basis with no real direction. So this is, the algos have been having a field day within the markets. They try to push it to the upper edges, get everybody long, smack it down. They get everybody short, blow everybody out on the long side, and they snap it right back. All right, again, that's just something that they do. As you can see here, a lot of action this past week, but we had some upside extensions up here and some lower side extensions up here. So we've had pushes, reversals, rejections. We've had pushes down, rejections, all the way back. All right, so my feel is, you know, from what I can see here, the bulls are going to really need to convert the 23.46s, right, to the 23.50s, and make sure that that is solid new support for them. And the bears, of course, want to take it down below the 23.34 area. Okay, and then lastly, let's take a quick look at crude oil, since it was the big loser last week. If you take a look at, you know, and keep things in perspective, all right, you can see really that even though last week was a downer, okay, this is really just followed by a very strong 2-week period, all right, that saw a retracement of the big down drop. Okay, so again, one of these situations where just the, you know, the markets is just pushing up and down to lower edges and upper edges, and you know, trapping longs or trapping shorts, and again reversing them back. So all in all, really no kind of real direction on a swing basis. But on our intraday charts, and again, that's the land that we live in on a daily basis in our trading room. We just basically keep in alignment with the major daily trend action or bias, and knowing what the bigger picture is above us, and we keep in alignment with that. This keeps us overall out of trouble and focused on the business at hand on a day-over-day-over basis. So as an intraday trader, right, you want to stay focused with what's happening at that level. Okay. All right, so that concludes this week's preview and review. And feel free to come in, take a free trial. If you have not taken a free trial with us already, we'd love to, and you're new to watching the video series, come on, take a free trial. I'd love to have you visit with us. Just go to PolarisTradingGroup.com/free-trial, as you see it on your screen. And if you want to reach out to me, David at PolarisTradingGroup.com, or visit us at PolarisTradingGroup.com, and contact Patrick Zielbauer or your Infinity representative for any additional information you may need. Okay, I hope this has been helpful for you guys, and let's have a good trading week. And again, I always welcome feedback, and if you'd like to see certain things on our review, I'll be happy to consider them. All right, good trading, everybody. We'll see everybody on Monday. Thanks.